Yo, what's good, man? Hey, all right. So today, I ain't gonna lie, I didn't upload my execution for the trade that I took today because, bro, it was bad, bro. I FOMO'd into a bad trade and it's just embarrassing, bro. Like we not. I'm gonna show y'all the trade I took, but it's really no point in me even posting that video, bro. It's no point. But this video will be like a breakdown and like a back testing session basically. um like if y'all didn't know, like basically the whole point of this channel really is just like one, to you know like track the journey that I'm having with my trading and stuff like that, and then two, kind of be like informational to people that are like new to trading and stuff like that, so you guys could learn from my mistakes or my successes as well. So I'm gonna break down basically what I seen today, and what I took and what I should have taken, and basically just show you guys like how I handle my losses basically. So after I lose and stuff like that, I'm always, obviously it's like irritating and stuff like that or whatever, but at the end of the day, bro, the day gonna end, bro. You gonna lose and it makes you better, bro. It makes you better. It's only a loss if you never learn from it. So I just like to reflect from my losses, and try to bounce back and not try to never get too high on a win or never get too low on a loss. You know what I'm saying? So that's basically my outlook on it and how I try to look at things and stuff like that when it comes to losses and trading. Um, but yeah, I'm gonna basically just show y'all what I seen. So, oh dang, I turned. All right, I'm a, I'm about to mark up. I'm about to mark up the lows I had marked up from market open. This low, and then, but yeah, y'all, man, I took a bad trade today. Nah, that joint, that's embarrassing, bro. It's embarrassing, but that's really not the reason why why I didn't post it. The reason why I really didn't post it is because, like, bro, I was in the trade for like 30 seconds and it got stopped out, so it's really nothing to post, and it was a FOMO trade, so there was really no real good narrative behind it or nothing really that you guys could learn from it. It was literally just me losing in 30 seconds, bro. So I'm about to show y'all basically what I seen and stuff like that. What had happened today. Um, so market open. Yo, I'm tripping. All right, yeah. So what happened? Market open. Rebound. All right, we took this draw of liquidity here. Basically, draws of liquidity, if you guys don't know what draws of liquidity is, basically a draw of liquidity is basically where a lot of orders are in the market, right? Or a lot of stop losses or stuff like that. So like, for example, if you wanted to take this trade right here, like if you wanted to take this and you enter like right here, your stop loss, like most people are gonna put their stop loss at the bottom of this candle to basically protect themselves because they feel like this is bullish. This is bullish displacement. So displacement is basically like a big move to the upside or to the downside, like a lot of volume in one candle. You see how this is a big bearish candle, and then this is a big bullish candle, right? Bullish is up, bearish is down, right? So that's basically what liquidity is, bro. So everything's liquidity. You guys could, I'm gonna make a playlist with all the different terminologies and stuff like that, but the main thing that I look for like liquidity and stuff like that is the swing highs and the swing lows. So you see how the structure of this, it goes from up to down like that. So the peak of that, the peak, or you could say like the valleys or the swing lows, the valley of this, the valley of that right here, the valley of that right there, and then this is a peak, this is a swing high, a peak, the peaks and valleys basically. That's where the liquidity is, right? Cool. So we keep in mind we have a bearish SMT, and a bullish SMT. All right, cool. So draws of liquidity that I'm seeing, that I'm looking for, are this high, this peak right here, this peak right here, and this peak right here, right? These are all internals, so I'm gonna put the internal line on there for y'all, so y'all can see that. All right, cool. Same thing over here. It's an internal right here, internal right there, already marked up, and then an internal right here too. Cool. All right, so now NQ has taken this internal and has displaced through it, right? ES has not taken this draw of liquidity, this internal draw of liquidity yet. Okay, never mind. It does, I guess. Okay. But NQ has taken the second draw of liquidity here, and this is the second one here, and you see that we have not taken it on ES. So ES and NQ work together. They trade usually in the same directions and stuff like that. All of the companies that are in NASDAQ 100 are in the S&P 500, right? So this is the bigger company. So think of it like S&P 500 is Nike and NASDAQ is Jordan, right? The Jordan brand, right? So you see, everybody understands how Nike is the bigger company, and then Jordan is just like, like a brother or a baby company of Nike or whatever, like a line of it. So whatever. So that's basically how you could think of it, right? So that's why I look at both, right? Because it could give us details about what we should be looking for, what we can see in the market and stuff like that, and help us with our executions. So the fact that we took this second draw of liquidity and we didn't take it on here, that is called a bearish SMT. And bearish SMTs are basically a form of manipulation in the markets. I'm gonna link a video to SMTs and more stuff like that. It's an ICT concept. But basically that's what it was, right? So we have a bearish SMT. So if we are bearish and we want to go lower, these candles will start displacing and disrespecting this candle right here. What happens? We get a full disrespect here. So this candle right here is the trade that I should have taken. And you might be wondering, why should I have you taken this trade? I should have taken this trade because most people, so there's 95% of traders, they never make consistent money in the markets, and they consistently lose. And then there's 5%, so that is called being unprofitable. And there's a 5% of traders that make money from the markets, and they have a profitable strategy, and they are consistent, and they're able to make money and do this for a living or enough to have another side income or whatever, right? So 95% of traders, they FOMO into stuff, how I did today. I was a part of the 95% today. I was FOMOing into trades. I was just doing bad stuff. I had a bad backtesting session last night, and my mind was all kind of thrown off today, so... But it is what it is, bro. I'm not gonna make no excuses. I just gotta get better, right? So, boom, right here. What I see is, okay, when people, we have to understand narrative, right? Clearly, we are in a bearish sequence, right? Clearly, a bearish sequence. We are going to the downside. We're in a downtrend. We're in a downtrend, right? Cool. So the 95% of traders are always going to enter trades where they feel like they can make the most money without any type of narrative, any type of anything. They're just doing it based off of how the candles look, and they're entering their trades, right? So with us having a bearish SMT, people are entering this trade, but and the market is displacing and showing displacement to the downside. But the thing is, where are we displacing to? Okay, so there's draws of liquidity here, right? Because the people that say the people that enter, like if you wanted to enter the trade like right here or something, right? You will put your stop loss under this candle, right? You will put your stop loss at this low. So the next draw of liquidity is 80 points, 80 more than 80 points away from where price is now. But these people are FOMOing into this trade. And this bearish displacement doesn't hold. Actually, in live market, we start going lower like this. This is called the invite of sellers. We're inviting more sellers, and then we reverse and flip on them and take them out of their trades, right? So the 95% are entering trades like this. Cool. They're going to put their stop loss here because this is where they are protected. And then they're going to target, say, here, whatever, right? But you see this gets them stopped out. You get stopped out when you do stuff like this, right? So there's always winners and losers in the market. When you are winning the days you're winning, then there are other people losing at the same time that you're winning. On the days like today when I lost, there's another person winning, right? So the people that lost this trade, I could have been a winner that helped them lose their trade. Basically, it sounds kind of messed up, but it is what it is, bro. Like, so I should have seen this trade with the understanding that, okay, this bearish SMT is not delivering us lower. And we just took 2 draws of liquidity and we're still not delivering to the downside, which means that the market probably wants draws of liquidity that are higher, right? So we start going up. I should have entered a trade like this. 30-point stop loss, 30-point TP, take profit, and I would have won my trade for the day. But that's not what I took. But that was probably the best trade that I could have taken today. All right, so let's see what happens after that. I'm kind of yapping today, bro. This might be a long video, but hey, this is just like the behind the scenes of, you know, my thinking and how I go about trading and stuff like that. Oh, and I didn't even see this price void right here. Dang, yeah. No, I mean, it makes sense. No, I didn't even see that price void right there. So a price void is like a gap. So you see how when we're trading, all these candles are connected. There's no gap in between there. Like, there's a fair value gap, but like an actual gap in between candles, that's a price void, right? And the market will never, ever just leave a price void alone forever and not come back and get it. So I should have seen that and understood what the narrative was going to be too, but I didn't see that. So it is what it is. All right, so we take the third draw of liquidity. ES still hasn't taken this. So I'm like, all right, we're displacing through this third draw of liquidity. The next thing that we could be going towards this is this peak right here, right? This draw of liquidity. The peaks and the valleys are where the liquidity lies, right? This is where the market wants to go to, right? So this peak up here, the fourth draw of liquidity, is probably where the market wants to go next, right? All right, let's see what happens here. Okay. So on ES, we're getting an invite of sellers. A crazy invite of sellers. Bro, everybody is entering. The 95% are entering this, bro. They see this crazy displacement candle and they think, okay, we're going to the downside. And they're thinking we are in a downtrend. This is finally our move to get into this trade, right? No. The same thing that happened right here to sellers that wanted to get into trades here is going to be the same thing that happened here. And I should have realized that, right? Because where are you displacing to, bro? Where are we displacing to? Why enter this trade? Look how far you are from the draw of liquidity. You're literally 100 points away from a draw of liquidity. Why enter here? It's not certain that we want this. Now, if this candle displaces like that, holds, and doesn't get disrespected, next candle does something like this, rebalances a little bit, and then starts going lower like that. Next candle opens up, rebalances this a little bit. Next candle flushes to the downside like that. Then we get a rebalance. Next candle rebalances a little bit, and then true displacement lower like this. Then you enter your trade here with the understanding that you're only 30 to 40 points away from the draw of liquidity instead of 100. See what I'm saying? So like I should have seen this, bro. I should have seen this opportunity too. Next candle. Disrespecting this candle. This bearish candle. This candle is disrespecting this bearish candle. My entry should have been this. The rebalance into this and then started going higher like that to take out what? The stop losses that are up here, that are at the top of here. Rebalance like this and start going higher. I should have longed it like that to that draw of liquidity. I always take 30 points. I never get greedy. I could have did a 1-to-1 like this, and I would have 2 easy trades like that. I could have won. Feel me? But I married a bias of us being bearish, us being in OTE, all of this other stuff, and I wasn't reading what price was actually telling me, what price was actually showing me today, right? It was showing me opportunities to take these longs, but I wasn't taking them, right? With the understanding that, bro, we're so far away from draws. The people that are taking these trades here, they're going to get stopped out. That's exactly what we do. We take them out right here. We still have a bearish SMT because NQ has taken this 4th draw of liquidity, and ES has only taken not even the 3rd one yet, but we do end up taking it. Okay, so I think that I entered right. I think I entered on this candle, bro. Yeah, I did enter on this candle. All right, so this is the trade that I took, y'all. This is a trade I took. Terrible trade. As you can see, this did nothing. But in live markets, when I tell you in live markets, this is a, bro, this right here is a 40-point candle. This is a 40-point displacement candle. But it ended up us pulling back, and I actually got stopped out in the same candle, I think, or the next candle. Something like that. I probably got stopped out in this next candle. So in 1 minute, I lost $700 today, bro. It is what it is. Charges to the game. So, yeah, I mean, and the reason why this trade isn't good is the same reason why this trade wasn't good, and it's the same reason why this trade wasn't good. We are 40 points away. We are far away from we're far away from the next draw. So me entering right here doesn't make sense. Now, if this next candle, say if this candle closed like this, and then the next candle went up a little bit and then started going down like that, then that's a good trade because we have a reversal sequence, and that's good. But the market has not shown me any signs that we actually want to go lower. We have not show any signs. And how do we know that, right? People are taking shorts here, and that gets taken out. People are taking shorts here, and that gets taken out. So why did I think it was permissible to take this trade right here? I don't know. But it's a part of the game. We make the mistakes. We get better, bro. Like I'm not gonna be taking trades like this no more, bro. I got to lock in, focus, and learn from these lessons. I'm gonna keep losing. So yeah. So all right, that's basically what happened. And then we actually started dumping after the market took me out of my trade. Then we started dumping, right? So another trade I could have took was right here. Once we put in this is a manipulation in its own sense, right? Manipulation is to make people think that we want to go one way, and without actually giving that full move, we come back and take them out, and then after that, look at that, we start dumping for the rest of the day. This is prime manipulation. I got manipulated. I traded like the 95% today. You feel me? So these are the lessons that we got to learn and grow from, right? So yeah, so this would have been a good trade right here to take, with the understanding that we already have our manipulation. Nobody at this point is trying to take any sales, and that's when the market wants to deliver efficiently to the downside. You feel me? So look at that. For the rest of the day, we just dumped. After everybody, after three three opportunities for people to take to take shorts got failed and they got stopped out, then the market is like, all right, everybody's out of sales, everybody's thinking bullish now. Now we're gonna do something else. We're gonna, you know what I'm saying? Like, it's just how the game goes, bro. So that's basically the breakdown of today, man. These are the trades that I could have took. I'm gonna show y'all again. I think I took it off by accident. Right here, rebalance and go a little higher. Something like this. Go 1-to-1. So when I say 1-to-1, you guys see right here where it says risk to reward ratio. So this is basically how much money you're risking versus how much money you're gonna make. So a 1-to-1 is you risk 300, you make 300 if you win the trade. If you lose the trade, you lose 300. If you win the trade, you win 300. So these are some trades I could have took, and then this long that we talked about that I think personally was the best trade of the day. Definitely the best trade of the day, bro. I should have took this. It was really good, really clean, really good trade. I should have took. So that's basically how I do it, man. When I lose, I be hard on myself. I be hard on myself. I ain't gonna lie to y'all. I'm human, bro. I be hard on myself, but at the end of the day, I don't stay down for too long, bro. I gotta keep moving forward. You feel me? That's how I get better. That's how I learn. Win or loss is still a win, bro. Cause you learn and you get an opportunity to see, like, all right, boom, I could have did this better. I could have did this better today. Feel me? And that's how you get better, and that's how you don't take the same losses in the future. You gotta take them L's. You gotta fail before you can win. Feel me? So that's basically my back test for today. My breakdown for the trade that I took today. $700 loss. Crazy work. But hey, it is what it is, bro. We're gonna come back tomorrow and try to make it back, man. Try to make it back. Try to trade better. Trade with a clear mind. You feel me? So appreciate y'all for watching the video. Anybody watching the video, I appreciate y'all. Feel me? And we're gonna bounce back, bro. We're gonna bounce back for sure.